Welcome to today's market report.
European shares tumbled to their biggest daily loss in a month on Thursday as a slump in commodity price dragged down mining stocks, while luxury stocks were hit by a Chinese wealth redistribution push. The Pan-European Stoxx 600 was down 1.6% at a two-week low, with mining stocks sliding 4.2% in their biggest one-day decline since March. Luxury stocks with a large exposure to China's economy, such as LVMH, Kering, and Richemont, dropped between 5.8% to 9.2% on Beijing's plan to target excessive corporate profits and wealth inequalities. The increasing determination on the part of China to pour sand in the wheels of its own recovery story with a crackdown on various sectors, including tech and luxury, also appears to be weighing on sentiment, as well as on demand for raw materials, according to CMC Markets UK. Stocks around the globe fell earlier in the day as minutes published on Wednesday from the US Federal Reserve's latest policy meeting gave the impression of a looming cut in its massive pandemic-era bond buying program. Although the European Central Bank has held steady, rising inflation has prompted some policymakers to say it must begin to rein in its easy money policies that have been instrumental in lifting the Stoxx 600 to record highs. Focus will turn to the high-profile annual U.S. Jackson Hole Conference of Central Bankers in late August, where Fed Chair Jerome Powell could signal he is ready to start easing monetary support. ECB President Christine Lagarde will not attend the conference. Banking stocks, including Asia-focused HSBC, as well as Spain's BBVA and France's BNP Paribas, fell about 3% each. The travel and leisure index declined 2.5% as a surge in cases of the Delta variant of the coronavirus added to concerns of slowing global growth and took the shine of a solid second quarter corporate earnings season. With the European earnings season nearly at the halfway mark, profit for Stoxx 600 companies is expected to have surged 150% in the second quarter, the best since Refinitiv. IBEX records began in 2012. Among individual stocks, Swedish heating technology specialist Nibo Industria jumped 10.1% after posting a 64% jump in first half profit. Swiss building material supplier Geberit, on the other hand, fell 1.7% as it warned about rising raw materials prices. Utilities, considered a safe bet at the time of economic uncertainty, were the only sector in the green. On the FX front, sterling hovered near a 3.5-week low against the dollar yesterday as UK inflation data showed a sharper slowdown than expected, though analysts said investors were focused more on the state of the labour market. Having fallen in Tuesday after a jump in the dollar, the pound was little moved by the inflation numbers, which investors believe will have little bearing on the rising trend for inflation. British inflation fell to the Bank of England's 2% target last month, a slowdown that economists said was mostly likely a dip as the reopening of the economy after lockdown drives prices higher. Economists polled by the Reuters had expected a 2.3% rise in consumer prices, following a 2.5% rise in June. Eurozone inflation accelerated to 2.2% in July, its highest rate in nearly 3 years, and above the European Central Bank's target of 2%. Final data released on Wednesday by the EU Statistics Office showed confirming its earlier estimate. Sellers do not abandon the euro, dragging euro-dollar to fresh 2021 lows in the 1.1665 to 60 band. The continuation of the downtrend carries the potential to retest the 1.16 zone, where sits the November 2020 low. The downside pressure, however, is expected to mitigate somewhat on a close above the 1.18 area, ideally in the very near term. That said, the subsequent recovery could target the July tops in the area just above the 1.19 yardstick, where it is expected to struggle. The near-term outlook for euro-dollar is seen on the negative side, while below the key 200-day simple moving average, 120.04. Substantial demand for safety pushed the US dollar higher against most major rivals, not only to the euros, but also Aussie dollar falling to fresh 2021 lows. Dollar-CAD pair trades at its highest since January, while the government bonds surged with yields falling to fresh weekly lows. The 10-year Treasury yields was at 1.22%.
This is today's market news. Thanks for listening. We'll see you next time.